Good morning and welcome to the FP Markets daily market update. So I say good morning, but it's actually good afternoon here in Sydney. I've only got around to getting into our webinar today. Well, it's 3:45, so ASX nearly closed, but a good day for the ASX 200, as you can see here, sort of close to closing, 0.71, 0.72 now percent up. Buoyed really by news on Wall Street last night towards the end of the day. US government coming probably to an agreement to lift the debt ceiling. So I've forgotten, I think it's 28 trillion or something ridiculous now. But certainly that's what's really buoyed the markets. How long that's going to last, I'm not entirely sure for, especially coming with Thursday here in Sydney, and obviously only a few trading sessions before we get that key non-farm payrolls data Friday night or Friday lunchtime for the guys over in London. And I think there's going to be a very, very big focus on that as the week comes to a conclusion. It's certainly something, we've had some decent numbers out of the States this week, which has been good and encouraging, and then that's actually sort of contributed to stock markets probably topping out a bit as more expectation comes on further tapering from the Fed, and brings the possibility of a rate hike closer and down that curve. So I think we're probably not going to see too much in the way of drastic moves across the market. What we did get last night was the ADP non-farm, so the usual encouraged precursor to non-farm payrolls, and that did come in stronger than expected. So I suppose a lot of traders and investors out there will be looking for the non-farm payrolls to come out in line with that, so slightly higher expectations for around about 500,000 new jobs created, 490 exactly on my chart at the moment. So I suppose if we do see some topside numbers there, then that does go in line with some of the other data that we've seen this week out of the US. ISM services PMI came in stronger Tuesday night for us here, and that was sort of 2 points higher. So expected at 59.9, came in 61.9. So once again, something stronger from the US. I tend to think if we do see a stronger number, we'll probably see the dollar move to the top side. Expectations of that rate hike come in, expectations of tapering increase, and then probably stock markets come off a bit as well. So just having a little look through the currencies, everything's pretty tight, to be honest. The Aussie battler, we'd seen this recovery in the currencies against the dollar. This is a pretty boring trend line, so I'll take it out. We have seen pretty range-bound conditions in the Aussie, trading just below 73 cents at the moment. It's capped out a few times at 73 cents, and I think there is talk of decent options interest out there, and that's probably what's capping those moves at the moment. So I think probably for a decent move in the Aussie, all things remaining equal, we're probably looking at non-farm payrolls. Yesterday, of course, we had the RBNZ. They came out with a, as expected, rate hike, and sort of refreshing, I suppose, for a lot of currency traders that we're actually starting to see some movement out of central banks now. Obviously, we've actually seen the Kiwi against the dollar come off slightly, and it's come off against the Aussie the Aussie as well, which is interesting. But I think longer term there may be an opportunity for Kiwi to appreciate on the crosses, because if we've got the RBNZ in a hiking cycle, and not many other central banks, certainly the RBA, the local one here, is indicating it's keeping its sitting on its hands for at least another 2 years, then we might have interest rate differentials coming into play on the longer term fundamentals and pushing the Kiwi a little bit higher. So keep an eye on that. It's probably more of a longer term play. Certainly against the dollar, I think the Kiwi's going to be, like most of the majors, trading on the whim of those non-farm payrolls, and that doesn't come for another few sessions. So I'm not expecting it to jump too far out of the ranges. So cable, which has been a favourite of all traders for the last few weeks, and probably most of 2021, to be honest, probably also got the most opportunity to move. We're sitting mid-range at the moment. For me, I don't think we've got too much on the longer term dailies. Then we're not too far off this support trend line. Obviously, we did base just above 134 towards the end of September. That's probably a target for the bears at the moment, but we're significant off of that, but we all know how quickly cable and sterling and the sterling crosses can move. So something a lot of traders are looking at very, very closely. Once again, I think we're going to be looking for the non-farm payrolls to give us that real kick in cable in particular, and then some on the crosses. I think we'll start to see cable of the sterling side probably dominate moves there as well. This is one of the reasons I've said that. Euro pretty moribund over the last few days. Sort of this little pathetic support that we had at around 115.60 has seemed to have capped it. Very, very short term indicator level on the hourlies. I'll probably be taking that off relatively soon, but some sort of interest around there. This normally reflects a little bit of a pattern that there's some options interest. It's decent size. We've not really got too much else kicking in. So we'll see how it goes. But I've left that trend line in on the dailies. We've had a clear break, and I suppose more technical guys out there would see us as moving to the downside. Personally, I think once again we're going to turn back to that fundamental data, the non-farm payrolls, and we probably need a stronger number out of the US that will help that move down. On that note, last night we did have the ADP non-farm numbers, and they did come out a little bit stronger. So you've probably got investors leaning to that sort of higher number if they use that as any kind of indicator at all. So it's going to be any interest. That generally would then place the risk on that non-farm payroll to the downside, i.e. you'll get a better move if we get a downside surprise on the non-farm payroll, so probably stronger currencies. Longer term, looking at this is the dollar yen chart. We have had some decent moves in the dollar yen recently. It's been pretty quiet. A lot of traders would say if you've experienced sort of the volatility before in dollar yen, you've been pretty disappointed with it over the last year or so, or even two. But as you can see here, we've had some really cracking moves over the last 3 or 4 weeks. 109.20 up to that 112. We're still not too far off those highs. Once again, I think we're looking at non-farm payroll data. Yen crosses could be very interesting as we move forward as well. So certainly keep an eye on those. As usual, we're not expecting too much out of the Bank of Japan at the moment, but do keep an eye on the political situation over there from the fundamental perspective. Cad Oil has been moving, as we know, and Cad is a big correlator with oil due to the vast reserves that the Canadians have got. Still looking a bit perky. It's come off a bit oil recently, but CAD still looking strong against the dollar, as you can see here. Recent lows 125.50, and we look back to sort of early September, it was just underneath 125. The figure that's probably going to be a bit of a target on the top side, and as you can see here, I think 128.50 is my level. Once again, dollar CAD I think is going to be trading on the whim of the non-farm payrolls. Do pay attention though, if you're trying to trade that non-farm payroll data, if you're trying to trade the loonie, it's called it for a reason. Dollar CAD is a very, very tricky trade on those numbers due to the fact that this time in particular, and very often we've got Canadian data at the same time. So we've got Canadian employment data, the employment change and the unemployment rate at the same time as the US non-farm payrolls. And so it can be an awesome double whammy trade. So if you get weak Canadian data and strong US data, bang, you're going to see that dollar CAD fly to the top side. But you can see some confusing moves as well if you get a strong number from one side and a strong number from the other. Traders go all over the place, and it becomes a very confused trade very quickly and can become a little bit nasty. So do bear that in mind if you're trying to trade the loonie over the non-farm payrolls numbers. Dollar Swiss here actually looking sort of fairly nice from a technical perspective. Like it's had a nice, and it's moved nicely in line with that euro. There's a nice trend line here that's got a few touches on it as the dollar's sort of appreciated against the Swiss. Keep an eye on this one as well. Euro Swiss back down to recent lows. Previously, there has been talk, this is obviously a daily chart, I'll bring that up. Previously, there had been talk about central bank interest. And as you can see, it's sort of based around 106.80. We have lows down here about 105.20 back in May 2020. Just a few things that did pop out. It's always popular when the Euro Swiss gets a little bit, when Euro Swiss sort of backs off a bit, that the SMB may be sniffing. So could be something out nothing, could be a little bit of smoke without fire, but it's always something to bear in mind when you're trading both dollar Swiss and Euro Swiss if we get into what you consider vulnerable levels. Just clicking onto what I laughably call the majors, well, not laughably, but some reason it's called my majors chart. Bitcoin surged to the top side. It had been quiet for a while, and I think if you listen to me most of last month, I'm like, oh, it's been surprisingly quiet. But look, back up to 55,000. Bulls are going to be targeting that $65,000 level again. This is that oil chart that we were talking about. So we've had a really nice move in oil. It's topped out there, high just under $80 a barrel. We're back here. I've left that trend line. It's sort of found a little bit of support on the, not surprisingly, on the former high and where that trend line was formed. So traders will be keeping an eye on this level, and be interesting to see where that moves and whether it moves before those non-farms. For me, gold trading pretty much in very quiet ranges for gold, especially. Always see a lot of interest in the shiny metal as we move forward. Longer term, I think it looks very interesting. I keep highlighting this every time we come back to it. So just underneath that 1700 level, we've had a few lows over all of this year, really. So that could be a target on the downside. Obviously, these previous highs, this trend line will be the target on the top side, currently coming in just under $18.50 an ounce. So that's pretty much it from today. I expect to see everything sort of trading in line. Maybe the impetus that we got from the US, there'll be focus on what's coming out of the government, what's coming out from data. But really, to me, I reckon we're sort of range bound until we get those non-farm payrolls, and it could be we could be off to the races if we get a big surprise there. So good luck with your trading over the next couple of days. If you need anything from us at FP Markets, please do let us know, and we'll speak, or I'll be back on Monday. Thanks very much. Cheers.